Okay, so guys, let us take up an example on marginal costing that I consider important for the Jan 2025 examination. And this sum is a very old CA final examination question, that is 1980 examination question that appeared in 2018 CA intermediate, but old syllabus. Okay. Now let us work through this example. Let us first read the question and then understand the question and give the solution. Yes, Renuka, read the question for us.
A company is producing an identical product in two factories. The following are the details in respect of both the factories.
Okay.
So they have particulars, factory X in rupees column and factory Y in rupees column.
Okay.
Selling price, shall I read for factory X first?
Yeah.
Selling price 50, variable cost 40, fixed cost 2 lakh, depreciation included in the above 40,000, sales in units 30,000 and production capacity is 40,000 units.
Okay, guys, let me discuss this first. Now, what is a selling price given for factory X?
50.
So, you are producing the same product in two factories, okay? X and Y. So, in factory X, what is the selling price? 50. And what is the variable cost per unit?
40.
That means you should know by now the contribution is rupees 10 per unit. That is a unit selling price minus what? The unit variable cost. And then what is the amount of fixed cost given? Is given as rupees 2 lakh.
Rupees.
And that includes a non-cash expenditure 40,000 in the form of depreciation, right? Now you can say 2 lakh includes your salaries, rent and other administrative expense and including what? Depreciation.
Yes.
So once you minus 40,000 from 2 lakh, how much you get? 1,60,000 is your cash fixed cost. And it's given that currently you are producing 30,000 units in factory X. And what is the capacity of factory X?
40,000.
40,000. Now for factory Y.
For factory Y is 50 rupees selling price.
Because the same product, right?
Yeah.
So selling price doesn't change, 50 rupees. Then
the variable cost is 35 rupees.
That means the contribution is 15 per unit. Next.
Fixed cost 3 lakh rupees.
3 lakh.
Depreciation 30,000.
That means 3 lakh includes 30,000. That means a cash fixed cost will be 2,70,000. Next.
Then sales in units 20,000 units.
You are currently producing 20,000 units in factory Y.
The capacity is 30,000 units.
But you can produce up to 30,000 units. That is installed capacity of factory Y. Then.
You are required to determine.
Okay.
A, break-even point, BEP for each factory individually.
Now, you have been asked to calculate the break-even point. And here we are going to find the break-even point in what? Units. And we have the data to find the break-even point in units. Next.
B, cash BEP for each factory individually.
Now, you have been asked to find the cash break-even point, where I'll consider the cash fixed cost and find the break-even point. Next.
Then BEP for company as a whole, assuming the present product mix.
What is the mix? 30,000 units in X, 20,000 in factory Y. What is the ratio? 3:2 is a mix. Based on this, you have been asked to calculate the break-even point for the company as a whole. Next.
Then D, BEP for company as a whole, assuming the product mix can be altered as desired.
This part is quite difficult to comprehend. Let me explain this later. Next.
Then E, consequences on profits and BEP if product mix is changed to 2:3 and total demand remains constant.
Right now, what is the demand? We are selling 30,000 units from X, 20,000 from factory Y. What is the total demand? 50,000 units, right, for the product.
Sir.
And you want to change the mix to what?
2:3.
3. Instead of 3:2, it's going to be 2:3. That's it. These are the questions that are thrown at you. Now, this can come for solid 14 marks in your examination. Or this can be an MCQ, right?
Yeah.
So, 5 questions into 2 marks each, 10 marks. Now, let's go ahead and take on the solution. Yes.
So, computation of break-even point for each factory individually. The fixed cost for factory X is 2 lakh given and factory Y 3 lakh given.
No doubt, right?
Yeah.
2 lakh rupees and 3 lakh rupees. Next.
The contribution per unit is for factory X it is 10 and factory Y it is 15.
Which is nothing but 50 rupees minus 40 rupees, how much? 10 rupees. And for factory Y, 50 minus 35, 15 rupees. Next.
So the BEP is fixed cost by contribution per unit. Therefore, 20,000 units of factory X and 20,000 units of factory Y.
That's it. No, basically 20,000 units is a break-even point for both the factories. That is dividing 2 lakh by rupees 10 and dividing rupees 3 lakh by 15. You get 20,000 units each. That is a break-even point. Next.
Next, B question. Computation of cash break-even point for each factory individually.
Okay.
So we are finding cash fixed cost first, which is 1,60,000 in case of
which is 2 lakh minus 40,000, what I discussed earlier, right?
Yeah.
It's a non-cash expenditure, remove that. So 1,60,000 for X and a Y 2,70,000. Then
contribution per unit is 10 and 15.
10 rupees and 15 rupees.
So cash BEP is cash fixed cost divided by contribution.
That is all. So 1,60,000 upon rupees 10.
16,000 units.
And then for Y?
It is 2,70,000 by 15, 18,000 units.
Done. So with that we are done with 2 subdivisions, right?
Yes, sir.
And then we go to the 3rd subdivision. Now where you have been asked to find the break-even point for the company as a whole. In that case, remember, we have to calculate something called the average contribution per unit. So whenever there are more than one product,
yes, sir.
In this case, the same product but 2 different factories. Wherever you have been asked to find the break-even point, okay,
yes,
for the company as a whole, you can apply this formula, dividing the fixed cost by average contribution per unit. Yes.
So combined or average contribution per unit is equal to 3 into 10 plus 2 into 15 divided by 5.
First, what is 3 and 2? The mix. We know in factory X, the company is producing and selling 30,000 units.
Yeah.
And Y 20,000 units. Yeah. So what is the mix? 3 is to 2. That means what? For every 5 units sold, we are selling 3 units from factory X
and 2 from factory
2 from factory Y. So I take 3 into rupees 10 contribution plus 2 into rupees 15
contribution.
The whole divided by 5 units, you'll get the average contribution per unit. You get rupees 12
per unit.
Then next.
Then fixed cost is 5 lakh.
That is your fixed for the company as a whole.
Yeah.
It is 2 lakh rupees
and
3 lakh rupees in all 5 lakh rupees. And divide that by
12 rupees. We get combined BEP 41,667 units.
And that is the number of units you have to sell, which will be produced in factory X and Y in the ratio 3 is to 2. But you have to sell 41,667 units to what? Break even.
Yes.
Is that fine? Yes. Next.
So next D question, BEP for the company as a whole, assuming that the product mix can be altered as desired.
And let me explain this. And people just keep watching the screen, okay?
Yes.
It is given that you can alter the mix. It need not be 3 is to 2. In that case, what? You can say from the question, factory Y has a higher contribution per unit. So what you will do, you will work factory Y at installed capacity.
Full capacity.
At full capacity. And you all know that break-even point is a point at which the contribution from the units produced and sold equals what? Your fixed cost.
The fixed cost.
You get it?
Yes, sir.
So over here, you will be producing and selling 30,000 units from factory Y into 15 rupees contribution every unit. How much? 4 lakh? 50,000 is recovered. But what is the total amount of fixed cost? 5 lakh.
Yeah.
Or that 4,50,000 is recovered from the goods manufactured and sold from factory Y. You still have to recover another 50,000 rupees, right? Of your fixed cost.
Yes, sir.
That has to come from factory X. We know the factory X is rupees 10 contribution per unit. What is 50,000 rupees by 10?
5,000 units.
You have to produce and sell at least 5,000 units from X. That'll give 50,000 rupees contribution.
To break even.
That is to break even. So it is going to be 5,000 units of X and 30,000 units of
Y.
factory Y. In all, 35,000 units will be the break-even point for the factory or for the company as a whole. Whenever the sales mix can be altered as desired. Is that fine?
Yes.
And that is answer to subdivision D. The last.
E. The consequences on profit if product mix is changed.
That is 2:3 instead of 3:2.
Yeah,
But they say
we
the
calculated
demand. The demand is 50,000 units. So you are supposed to find the profit, right?
Yeah.
At present
And
also after the change in mix, both you have to do for comparison, and also find what is the impact on break-even point. But remember one thing, the demand is same 50,000 units, right? But ratio is going to be what? 2:3. Yes, ma. Profit at present.
At present for factory X, it is total contribution 30,000 units at 10 rupees.
Yes or no? Right now you're producing, selling 30,000 units from factory X. That into rupees 10, how much?
3 lakh.
3 lakh is your total contribution.
Less the fixed cost 2 lakh rupees, or 1 lakh is the profit.
Profit 1 lakh rupees. Then
For factory Y, it is total contribution 20,000 units at 15 rupees, 3 lakh.
3 lakh.
Less fixed cost also 3 lakh, so profit is 0.
0.
So the total profit at present is 1 lakh.
That is for the company as a whole, 1 lakh profit. But when the mix changes to 2:3, but the demand is still what? 50,000 units of your product. How 50,000? Right now we are selling 30,000 units from X, 20,000 from Y. In all, 50,000 units, right?
Yes, sir.
That in the ratio 2:3 is what? 20,000 units of X,
And 30,000 units of
Y. So it will be 20,000 units into rupees 10, how much?
2 lakh.
Contribution. Fixed cost?
0. I mean 2 lakh.
2 lakh.
So
Profit
profit
is
is
0. Then factory Y, 30,000 units into
15 each.
15, 4,50,000.
Fixed cost is 3 lakh.
So
Therefore, profit
profit
is 1,50,000.
Therefore, the total profit will be how much?
1,50,000.
You saw? There is a 50,000 increase in profit
Yes, sir.
when the mix changes. Why? Because factory Y is more profit in factory
X.
than a factory X. Now, what is the impact on break-even point? Let's find the combined or average contribution per unit based on the new mix, right?
Yes, sir.
It is going to be 2 units into rupees 10 plus 3 units into
rupees
15, the whole divided by 5. It becomes 13 rupees, right?
Yeah,
Average
13 rupee per year.
per unit. Now divide a 5 lakh fixed cost, which is 2 lakh and 3 lakh. In all, 5 lakh by rupees 13. You get 38,000
462 units.
units will be the break-even point for the company as a whole when the mix changes. Is that clear?
Yes.
So guys, good luck for examination. Bye-bye.